markets at all-time highs. Are you getting a sense that this is a time to go out and buy despite these very tall valuations?
Yes, so I mean we've gotten quite a number of emerging markets new highs being reached. I think it's important though that when we look at the statistics here, 3 years since the general election in India, the market for the dollar-based investor is up about 15%. So that's outperformed EM by about 8% over the period, which I'm sure reflects a lot of the success that the Modi government has had in passing reform, which has made the global investor more confident on the potential growth of India as reform leads to greater efficiencies. But even though the market's on this new high, it is interesting, when you look at the longer-term charts, that the compounded returns in emerging markets have been relatively low. And so I'm still very bullish on the asset class, and India is part of that story. And we're expecting ongoing inflows into emerging markets as the global asset allocator, who still remains very underweight EM, begins to accept that the story of earnings growth is very much in place throughout emerging markets, including in places like India. So I'm of the view that, yes, you should be continuing to buy the Indian market as you should be with other emerging markets.
Adrian, hi, good morning. Yes, one thing that we've learned in our limited experience is that in a market like this, highs can be higher than expected and lows can be lower than expected, right? Whether or not you justify it with fundamentals. In your sense, what kind of a rally can we see from here on? Are we looking at a sustained uptrend where this market can even outperform other emerging markets before the end of the year?
Yes, so I don't think India will outperform other emerging markets. Our rating is neutral. Remember that all our ratings are relative to the asset class. So our bull case is another 10% up in emerging markets. So India would be performing in line with that. So that would be, a return in the high 20s for the full year, which is a pretty decent return. Now, the issue with the Indian market is a number of things. There are sectors in the Indian market that are significant, such as IT and healthcare, where there isn't a particularly good trend at this point. There are issues with trading with the United States. There are issues with relatively strong currency. So we're underweight those parts of the market. We're also underweight consumer staples because we don't think there's good value there. And we've been buying into more cyclical parts of the market. But again, valuations are high versus history, but we think they will be supported. And as we move into 2018, there is going to be a material improvement in the growth rate in the Indian economy, and we think that will feed through to a better earnings environment.
Hi, Adrian. Good morning. When we last spoke to you, you indicated that the bull case scenario for the Nifty is a target of 10,500. Considering now that we've already come to 9,500 and we're just about 1,000 points away from your bull case scenario, are you looking at reworking your Nifty targets?
Well, we publish index targets. Our index targets are what we've published. We don't speculate on whether we're going to change them until we come out and officially change the numbers.
Okay. Well, I want to ask about earnings. As you said, it looks like growth will generate earnings. But what are you working with? There are some who expect 20%. Is that possible?
Look, I think it's possible in certain parts of the market. So, if we can get a better retail consumer story coming through that perhaps broadens from just being city or urban consumer with, if you look at the data at the moment, you've got okay four-wheeler sales, but two-wheelers have still been relatively weak. So I think the consumer side could be better. For things like building materials, we're very optimistic about the earnings outlook there. I think the whole real estate sector at the moment, pre-sales of real estate are quite low, something 40% below their peaks. We think that that's going to start to become a major secular growth story. So I think there are a lot of cyclical earnings opportunities out there. For the overall market, 20% probably is a little bit of a stretch, but possibly, mid-teens is conceivable.
Just a word on this nifty targets that Rima was talking about, and Sonia said that this market is giving us higher highs, and she said lower lows, but actually it's higher lows. Would you say that this market's low is actually protected and perhaps moving higher?
I think it is. I mean, if you look at the options for the savings pool in India, real estate transactions are relatively weak. Bond yields have continued to fall. And fixed deposit rates that the banks are providing have come down post-demonetization. There doesn't seem to be strong demand for precious metals. And so I think equities are winning out as a sort of default purchase for the local savings pool. And then globally, investors are still underweight emerging markets. A lot of the money that's flowing into emerging markets is going through passive products such as ETFs, and they have to put 9% of that money into India. So I think the market is technically looks very good in terms of supply and demand, which should mean that the lows are protected.
Okay, before we end the discussion, I just wanted to ask you your views on the auto space, because I remember the last time we chatted, you did mention that you're positive on consumer stories, auto stocks, etc. Is this a space that still has value, or do you think that most of the juice is out here?
I still think it's a place that the global investors should be exposed to, but with the focus on the automakers that have the majority of their revenue and asset value in India.
Adrian, despite the bad loan problem, the bank nifty is still at record levels. How would you approach the banking stocks from here on?
Yeah, so look, I think the bad loan problem is history. We've had lots of discussions about the scale of bad loans. We've had relatively aggressive policy from the Reserve Bank of India. The market knows about it, knows that there's a resolution in place, and is looking forward to an environment where you get a better level of corporate confidence in India, leading to an acceleration in corporate loan growth. You can then combine that with strong consumer lending and an environment that looks pretty good for the bigger banks post-demonetization. And India's financials to us look like a nice high secular growth story.
Okay, that's a great note on which to end this conversation. Thank you.